Hey traders, what's going on? Jamie Saettele here. It is January 25th, 2018, midst of a dollar crash, which was suggested by this analog. We haven't really taken much advantage of it, but that does not mean that we panic and try selling dollars here, because we are at the next point in the analog. So as has been laid out in detail here over the last, well, we are short dollar yen though, but as has been laid out over the last, really, it's about August, I think we started following it, because we started following it back here. So it might have even been June. I don't know. It's been pretty wild, the fact that it's worked this well. Someone that looks at, or looks for market histories that may be useful, if you will. I've never seen one that's worked this well. So sometimes it's hard to believe your own bullshit, right? And that was kind of the issue here. Anyway, let me know that you can hear me and see the chart before I continue my rambling. All good, says PK. All right. Okay, so bottom line here, folks, is we are really close to a panic low of sorts in the dollar. And as I've said, sometimes it's hard to believe kind of your own eyes here. But look, I say I'm going to go for this, right? Looking for a low in the dollar. I think tomorrow is the best candidate personally, because there's just a tendency to get the Friday low or the Friday high before you get a bigger reversal, right? That's just a market tendency. It happens. So we're coming into this level where I think it can certainly happen tomorrow, or it could be tonight, depending on where you are in the world, of course, right? We're certainly really close levels. Well, levels wise, we're already in our range for euro. I had the top of the range of 25.50, and we got 25.37 this morning, so we're awfully close. But to give you, to go back on this a little bit, so this is back in the 90s, and it's actually this one. So this says essentially that we're like right here. Now we're right here. Okay, so right there, right? So you can see how this is progressed pretty well. And what we're talking about is a 3 to 4 day rally or so that I think takes us back. If we're talking euro terms, I think it could probably take us back to, close to back to 122, to be quite honest. So fear not on missing the euro rally, although it's not like we haven't tried. We've had orders in at different spots. I actually trade for a hedge fund as well, and we do all of our currency trades through options. So I don't know. That's also maybe an opportunity worth exploring when we're talking about bigger directional possibilities. We might want to. I don't know if any of you guys trade options, but that's something that we can explore as well, because it does suck when you kind of miss something like this, even though you had it coming, right? We saw it, we had it, we had the whole thing. All right, so what I want to do is talk about how I want to approach the next couple days, right? So I think that the best short opportunity, as far as fading this dollar move, as per the analog, of course, and that's an important distinction, right? We're looking to do this trade, or looking to fade the dollar here, not because RSI is overbought, or because we think it's too high or whatever. It's we have really good evidence that suggests that we are at a spot where we should really be picking or taking a shot, right? So let's go then to the dollar, to the price levels, which you have from last night. And really, I'd look at that 88 area. I know I said 87.60 last night as well, which, in a insane overshoot, I guess is a possibility, but it's already feeling really emotional out there. And I think we're closer than not. So 88 is a level that I would expect us to really respond to. Again, you have the fork lower parallel from this fork, right? And this fork was resistance back in November. You have what would be parallels, right? This is log. You have what would be parallels from the original slope, as we call it, which, by the way, the euro's gone through its original slope. Part of that is a function, of course, of what a downtrend looks like and what an uptrend looks like on log scale. But then you also have I guess we call it the real original slope, like as original as it gets, because this is the 2008, 2011 low, and that went through the same angle, goes through highs for old resistance from July 2012 and July 2013. All right. So 88, write it down. DXY, right? It's a biggie. And still also, right, I haven't seen, like, I'm going through the journal this morning, and I haven't seen anything crazy about the dollar move yet, right? We haven't had a front page, even business section saying like, dollar, plunges or something. Like, let's take a look here and see what it looks like. You can look at the journal for today, which is the 25th. And we've got stuff about the sicko. So here's Munchin pushes dollar to 3-year low, but it's in small little font down here, right? It's not like the one, remember when we had the one about the dollar and it was big font, huge font, top like this font. It was saying, the repatriation is going to support the dollar, right? That was literally right before the dollar started this decline. So we don't have that yet. That hasn't happened yet. We go to the business section. Nothing about the dollar on the front page. So we're not there yet. Is my point. We could be there tonight. We could be there tomorrow morning. Whatever, but we'll be there soon. So let's go to euro then, and we've already hit this. So this is the original, as I said, the original slope here. And spiked through it, obviously. The level that I would pay closest attention to, if we get a full-on craziness, would be probably 2660. That's the next square root level, but then maybe 2550. But the DXY levels are cleaner and more important, right? So 88 in DXY is where I think this really happens. So if where's DXY's, where's spot right now? So DXY right now is 88.68, right? Okay, so if we go 88.68 minus 88, we're getting 68, and divide that by 88.68, and that's 0.76% more. So we're going to multiply that by the current euro rate to get potentially the perfect level. All right, so that's going to be 124.87. And we are talking about hold on here. 125.83. Okay, so that is what we're getting for euro. So 125.83. That would be an area based on the cleaner cleaner dollar index chart that, frankly, I think we could top out at. let's put 25.83 on this and see what's there, if anything. All right, so you've got, lo and behold. So the December 2014 high, as we noted, is 25.50, but we're right. That's right here. So that's the November 2014 high, very close to there. So this whole area would seem to be appropriate and fit our narrative, if you will, that it's time to take a stand against this move here in the dollar. All right, so I would keep that in mind. 25.83, writing that down myself. All right. There is also we've got an analog for the for the euro itself. So if we go back, if we look at and compare this to the low or the turn, right? We're seeing a lot of the same type of markets from the 2000 low, which we have done before. Now this is bigger. The current move is wider. The base is bigger, so it actually could be more powerful. So you can see what we've done here is you have to stretch it out. So it's like this is bigger by a factor, right? But if you stretch it out, you can see the low pretty close matching up, okay? The acceleration, the top not really spot on, but the next low is right on. And now it has us right here, which would be the next turn of the sequence. So this certainly fits quite well with what we already have. And yeah, it just kind of gives you a little more evidence. Now, let's look even a little further ahead. If we are getting this, you know, this turn here, this near-term turn in the dollar, which, you know, again, I think we are. I'm actually quite confident in this. Then what is going to be a way to maybe play the other side of this? Well, we've got dollar Swiss, I believe, on the downside could be a massive, massive trade. There's actually an article from Bloomberg in December about how the dollar Swiss exchange rate, you know, it's like the biggest trade. It's like the biggest trade long was like the biggest trade on Wall Street in FX. So obviously that's falling apart right now. But technically, we are actually making a major breakout today. Okay, and again, I think we're going to get this you know, this retreat in the dollar, if you will, from its massive decline, and could be right about there too. So, you know, if we look at this 91, that might be even too deep. But what I'm getting at is that once we do get this pullback in the dollar, right, in dollar Swiss, dollar everything, I'd actually think that one of the better ways to play the next move down in the dollar is going to be dollar Swiss, right? So, well, you know, I'd keep that kind of in your mind here. As for the slope to play, so we're actually coming back close to the corrective channel low of 92.70. I would use a regular fork because I believe it's an impulse and we're heading a lot lower. All right, but this is going to be a spot to short the dollar on a bounce. All right, so that's going to be, you know, at least a week or so away, but something to keep in your mind. Cable has absolutely gone ballistic, of course, as we know, And if we bring that in, so we've gone through everything for the most part that I have up here. I believe there is a 50% retracement, though, of the entire drop from 2014. And if you go to the Brexit, or not the Brexit, but the flash crash low in cable back in October 16, you get 44.70. If you go to the January low, which to me is the real low, you get 45.90. Okay. Now that's going to be near the upper end of the fork. Okay. You know, so getting there over the next day or two might seem a little bit of a stretch given our stance on the buck right here. So I don't want to mess with this right now, but this cable to me is one that's also going to be, you know, once you get that initial rip off the low in the dollar, cable's going to be one that I think that we're going to want to actually buy on a very strong pullback, right? That pullback might be something like into this line here. Okay, you know, which could put you back down near, you know, below 141. Someone sent me, a friend of mine sent me the DSI. I don't, you know, the DSI, the Daily Sentiment Index. I don't get that every day, but every once in a while, a friend will send it to me or something. And this guy sent me. This was here on 123, and cable DSI was 90, I think. So after yesterday and today, I can't imagine what it is. It's got to be in the mid 90s. I know DSI on the dollar index was like 8 or something. So these sentiment figures certainly fit the bill as far as having a near-term, you know, capitulation that it should be pretty violent. Okay. So either way, yeah, I would not screw around with this right now. Concentrate on euro in the short, probably up near, again, I think 25.80, and we'll, you know, revisit things like pound dollar and dollar Swiss for the next trade for the larger dollar downtrend play. And on that note, we have an analog for cable. Do you remember the analog for pound dollar back last year that we were looking at? Seems like we were maybe a little early on it because it's starting to work again, if you will. So this was back to, remember, 1989. And what we had was, we had compared the rate of change. It was the only thing that I could see where you had this type of decline followed by this type of base, right? So what we had done previously is we had this compared over here, right? And so last year we were looking for the move that we're getting now. We were looking for it like kind of like, you know, like to take off last September and whatnot. You remember we were long actually into the into that BOE, but then it failed and we consolidated more. So, well, now the move's happening. So if you move it over a little bit, actually works out pretty well, right? You can see that the low, the high, the low, and the takeoff. So if we go to the daily chart, you can see it pretty well, right? It's as far as the lineup of the takeoff, sideways, up, sideways, and then takeoff. So I'm thinking that if this is true, right? If this is going to play out, you can see that we're at the hiccup area. So we're like in this area here, right? We could be something like here, in which case, again, this is saying the same thing as the dollar analog from before, in which, you know, we could get, you know, a very strong move to the downside. For reference, by the way, if we go back and look at what this price distance is, it's like 500 pips. And within this giant move up, it doesn't look like much, but it's huge, right? So let that happen. Maybe there's a little more of a blowout. I can, offer levels that I think cable is going to run into real problems. And to do that, we had 43, 12 or 13 or whatever, and that, we went through there and have come off. But with me thinking that the dollar maybe has a little more capitulation into a Friday turn, you might have, another run on cable. As we know, cable likes to run through as many things as possible. So if we're looking at cable, we can get levels by viewing the square root levels. Here you go. Okay. So here's a few things for your info. We've got, this means January. We've got RSI was what was yesterday's RSI? 83.11. So let's just say RSI above 83 and see where we go. Okay, so RSI above 83. I'm going to thicken up the square root levels. Okay, so we've gone 1, 2, 3, 4, 5, 6, 7 square root levels up already, and it's January. Okay, and RSI is above 83. The next one's 44.29. All right, keep that in your back pocket. If I look back and look at instances when RSI has been above 83, we have here, which is after the financial crisis low, right? And that would have been, obviously it was not 1 month and it was not January, but you can see that you did reverse near a square root level. And guess how many roots you went down? 1, 2, 3, 4, 5, 6. You came 7 down after that. Okay. In 2006, RSI was above 83 for 3 days. It actually went as high as 85.5. But you can see pullback, square root level was right on the top, and you ended up going down 1, 2, 3, about 4 square root levels before you had good support. I'll tell you where I'm going with this in a little bit. This is a January 2004, where you went 83, RSI was above 83 for 5 days, but you only went 1, 2, 3, 4, 5 square root levels, reversed on the 5th one. The whole thing was retraced, and then you went higher again. So you're like, what's the point of this? Like, what am I trying to get at here? The point, this is, by the way, this is 2002, 83, square root levels only came down 1, square root levels came down 2. Okay, so my point here is that we can use these square root levels to trade counter. So let's say that you do get another move up to 44.28, right? I'd be looking for, based on the history of pullbacks, I'd be looking for at minimum 2 square root levels, which would be 41.96, and maybe something like, more like 3 or 4, which takes you back to 40.80. So this is stuff that I use the analysis. It's actually, I use it for orders a lot. So dollar yen last night, that order was at 109.44. Even the high volume level was 109.52, but the order was at 109.44 because the square root level is 109.44, and that's exactly where we topped last night, right? You can see it right here. Now the next square root level on the downside is 108.38. We're targeting a little bit more just because, again, there's reason to, because of the dollar analog and the Nikkei. But while we're on dollar yen, why don't we, and you can stop me if you have any questions on this stuff, okay? All right, so let's go to dollar yen actually, and I saw something on Twitter yesterday where someone said that Bloomberg was remarking about the dollar yen Nikkei relationship is broken. Like they just realized this. It's been broken for like over a year. So my thinking is that it actually comes back into line now, or there's a real risk of that. In other words, we're going to see dollar yen and the Nikkei move together again, right? And if we look at dollar yen here, I think this longer term chart is just a beauty. You can see what we're targeting on this run is 107.80 or 107.90 because 107.83, that's the gap. It's a gap actually. I didn't write that, but it is a gap. It's the gap from right after Labor Day, I think it was. But remember, that's when bonds topped. Bonds topped right here, and you had, you opened up with a gap down in the bonds and dollar yen just going ballistic on the upside, as well as stocks and everything. Well, that's no longer, right? Dollar yen did that for a month or 2 months, and then it was rolled over. So that gap combined with the fact that you do have the 75 line of this fork, again, if you want to draw this, just start back here on the 2015 high. Okay, it's just a channel, but we're drawing it from here, which is the flash crash from 2015, and then the high from December of 2016. And you can see how well it works. Hit so many beautiful levels, and 75 line there. Eventually, I do think that we're going to make a run on 105, the 105.50s. Just a massive level going all the way back to 2014. It's a level where, frankly, you could potentially see Bank of Japan step in and do something. They're not going to come out and say it, right? They might make some sort of comment like we're watching the exchange rate or something like that, but like they will come into the market, right, to try to support if things are starting to get pretty bad. And historically, 105.50 is a pretty good one. Right, they came in. This was right here where they came in October of 2014, and then 2 weeks later, it was revealed that they did the bazooka. Right, that was when they sent dollar yen, all yen, right, just down the toilet. All yen crosses through the roof, and the Nikkei went like crazy on the upside. And just, historically, you look at this, it's support back in May of 2016. It was actually resistance going into the election, and then we broke through it, and then we all know what happened. All hell broke loose there on the upside. So near term, look to 107.90 targeting. I'm happy with that target or that objective, and this is going to be a spot where when we get if we get this pause, or snapback thing in the dollar, we should be able to sell on that. So bigger ones. See, has been reestablished. Testing. Testing. I know. I think I lost you guys for a little bit. Testing. Testing. Okay, it works now. I'm back, says Mark. Great. Here I am. Okay, good. Thomas, thanks. All right, so we're back, and sorry, I guess the network connection was lost for a little bit there. All right. So we were on yen. We haven't missed anything. I realized we went away, and I shut up for a second, and now I'm back. So again, dollar yen, 107.90 is where, you know, again, I think we can bottom, and then I'd like to sell the rally again on this next move in the dollar. So, all right, we've done that. Now, going back to the Nikkei here, we have again, if we're coming back in line, this is kind of a frightening chart. If you're like a bullish, bullish Nikkei here, it's just a perfect channel, right? I mean, perfect. Even the midpoint of it was perfect. So, yeah, I'm looking at us coming off pretty good here. Big risk from, from the Nikkei here. Not saying you can't screw around up here for a little bit, but this is big time resistance, and I'm looking for this to, like I said earlier on Twitter, I said 2,000 points. Might be more like 3,000 points from here. That would be the next support. That's all I'm saying. That's the old highs, and it's this parallel right here. So, combine this with dollar yen, and you've got a nice mix of some risk off coming here and some yen strength. All right, Australian dollar. I'm going to do an S&P. Look at DAX, gold, dollar CAD. Dollar CAD. Let's start with that one, just because I've been thinking about it. Okay, so if we go back, this is one of the issues kind of I deal with, and there's no right answer to me or for me. Obviously, on very long-term charts, you have to look at log scale. Currencies are a different story, right? Like if you're looking at the S&P, like for the last 30 years, you can't look at arithmetic scale. It doesn't make any sense. But if you're looking at dollar CAD, like this is arithmetic scale, and it obviously was important because all these levels were hit, right? And that would put us, if we're looking at arithmetic scale, that would put us right at the median line, like right now. But the downtrend is actually cleaner on log scale, right? Log scale is cleaner in this sense because the 20 or the 75 line was support back here, and the 25 line was resistance back here. And then you had this was perfect resistance, and even this was support. So if we look at it in that respect, you're below the median line now, and you have reason to kind of want to be shorting this, right? So for me, heading into tomorrow with CAD data tomorrow and everything, and crude still extremely firm, although I do think we're going to reverse up near 68, and I'll show that in a sec. To me, there's reason to actually think about maybe a short into tomorrow. Maybe the final, maybe you get good CAD data, and maybe the final, capitulation of the dollar sends you another couple hundred points lower. I don't think that is a crazy notion. Okay. This parallel right here, support back in July, some action here. This is the rate hike, and resistance basically 2350s, former low. I would not give this anything over 124, 24.15, I guess. I would not give anything over that as far as a stop. But, if you get it, like you got 50 pips of risk or so, 200 on the downside. for, again, what I think is going to be something of a blow off for the dollar. So there's that. And then if we look at oil, so here's the weekly chart for oil, and we're going back to the 1986 low. That trend line from the 2001 low is perfect for support, and then the midline was amazing. And here we have the upper parallel, which has been resistance for when you hit it for the first time. Major resistance, major resistance, major resistance here for a pullback. Kind of becomes support after that. Resistance here. Even the financial crisis thing that was going down, right? You had some support, and then it was actually resistant. You can see it's a very important reference point on this on a longer term basis. So what that says to me is that 68 and change is going to be resistance, and you could get a pullback to say 50 to this line, which was the former resistance. You can get a pullback to say 56 and change at that point. All right. So that's crude. I would pay attention, close attention to 68 and change in crude. Let's go to Aussie. Okay. Here's one as well that works better. Aussie does on arithmetic scale as well, even on this long-term chart. So you see this line here, which was the resistance back. This seems to be kind of a very important dividing line. You can zoom in on the price action even back. Like even back here, right? In this, support back here. I mean, this is 2013, major pivot. And then just recently, of course, it was resistance over the September highs, and it was just support as well. So I would draw, given that I think we're probably going to see something of a dollar 3 or 4 day rally, kind of waiting for that. But then after that happens, I think Aussie is going to be a great buy for the bigger move to the upside. Okay. It might be back on this line just because that was support back here on the 23rd. And if that's the case, it puts you maybe back near 79.50 or so. I don't know if that's asking too much for this. The DXY analog has been good as far as anticipating broad dollar weakness, but as far as the next comeback, I'm not sure if it's as widespread or if it's just euro. Remember, euro, we have a record COT position there too, so it's a very crowded trade. Whereas Aussie is not the case. In fact, Aussie, they've been the least long that they've been in a very long time up until recently. Of course, I haven't seen the latest data. That's obviously changing as we go higher quickly, but again, let this play out. It's fluid. We don't have an exact setup here. My focus over the next day is catching this euro top, and then we will revisit these things. But yes, longer term, the Australian dollar probably extremely bullish. We have, the comparison that we've been looking at with the Australian dollar back to early 2000s turn, right? This is what we've been looking at, and a period of maybe a pullback or here or there, maybe some sideways before we really go would be great. That would be great just because we aren't long, and I'd love a great sideways pattern to get super long. But yeah, if the bulk of gains here appears could be over the summer, May, June, July in the Australian dollar. Okay. I know he tried to short last week, started to work quickly, was stopped out, and good thing. If we look at the Australian dollar, though, on our, our near-term chart, you do have this really steep channel. I don't know how long you can stay in this, but we are pressing the top of it. So, I mean, I guess you could attempt to short up here. With the potential for this dollar, maybe Friday blowout, I just feel like it's giving money away trying to short it right here. So, not for me. If you did, though, and if we did come off, I'd say that 80 would be support. Okay, just the bottom of the channel. That's all. Go into the daily chart here. Just gone through everything. Literally everything. That dollar blowout maybe takes you 84.43 possibility. If we pull back before then, the median line should be support. Again, don't want to concentrate on too much stuff right here. I want to really catch this euro move. All right. Okay, S&P Gold, DAX. And then I had requests for pound yen, GB, pound yen, and euro CAD. All right, if we take a look here at let's start with gold. I'll look at the CFD because I know that's probably what most of you are trading anyway. This is essentially the exact same chart. Amir asked, who asked for those pairs? Oh, a subscriber on Twitter, I think, asked for those. I believe that would be you. So you are here. Glad you could make it. Anyway, so this is, yeah, my man, says Amir. Yeah, what's up, brother? So here we have, this to me is, things have clarified. So before, I wasn't sure if we wanted to look at this fork, right? Essentially, I guess you could look at either one. They both kind of say the same thing, to be honest with you. They say support is like the 1340s. So you've got the channel here, great median line response, and then kind of trading around the median line with these levels, right? So you can see the resistance. I'm looking for something kind of like this. So remember back in August, median line touch, pull back, hit this level, and then go higher. Although the difference this time is that I think you probably just go higher. So with me, I'm looking at support again, probably 1344 on the CFD. And then eventually headed substantially higher, initially 1450, 1460, and then on the CFD, we're talking 1520s. On the futures, it's 1550. Okay, now, given the emotional market environment, I would not be surprised again if we see some sort of a sharp pullback here. Don't let it frighten you. Like, look to take advantage of it. It should be like a stop out. That runs, that runs people out that have gotten in and bought up here. So I love gold. Bigger picture. In fact, there are several things to look at from an analog perspective. This is the long held one that we've had, which again compares back to the 96 and then the turn into the early 2000s. And that one has been pretty good. With some of the turns, but it's saying like that we're looking for maybe a crazy spike high or something in March, right? And that actually fits the seasonal tendencies for gold. There is another one, and that is not here. That would be quite different. believe it is over here. I think it's the 2008-9 period. Yeah, so you can see it in terms of its, you can see, so I mean, just see the low, right? Okay, low, low. So the sequence of highs and lows match up really well. It's kind of sneaky in that you'd look at it and it doesn't, you wouldn't think it right away. And this one would have us maybe actually going sideways for a little longer. Okay, so it's a fluid thing. Let it clarify. So Rizwan saying, if orders 1344, what should be the stop? Well, from a you know, kind of a, what would I say? Kind of, from a more of a systematic point of view, I would look at it from here. Hold on here. I mean, you have to have your stop down under 1330. Probably, I know some people aren't going to want that big of a stop, but what you're looking at here is former highs / the midpoint of the 5-day range. And as long as you're above the 5-day range, it's a strong uptrend. Okay. Now, again, a smarter move is probably to allow this dollar blowout / recovery take shape. Like, so if you're looking at gold here and viewing it in the context of what is happening with the dollar and what we kind of think is happening, what I think you're going to get is something like this, right? So I think you could get something like, you know, a move higher initially, and then as the dollar pulls back, you're going to get the move down here. So point being, be careful not to chase up here, right? So something like this, and then higher. So after that 3 to 4 day pullback is that when the opportunity comes to buy the gold. We'll sell dollar kind of against a lot of things, but you know, including selling dollar yen again. So just, you know, think about the dynamics, how this works with the general dollar move, right? We get a little panic low or a big panic low, depending on your definition of little and big in the dollar, then you're going to see, you know, something of a pullback here first. Why don't we look at some square root levels real quickly in gold as well? I actually will look at it on GLD, if that's okay. This is the ETF. So 130 and change. And then maybe coming back to, you know, could be coming back to 126.90, right? Let's see what that would be for GC. So pretty much how I suspected. So 1378 in the futures, and then maybe a comeback to 1340, 1341, 1344. Okay, S&P, DAX, and then I will do pound yen and euro CAD. All right. S&P. Well, we've talked a lot about, what was it, 2840s. I kind of said that was the last level I had, because it is, at least based on this. So this is a Schiff fork, right? And we've looked at this now for, I think, several weeks, and we're there. I mean, we're, this is the top of that channel. I don't know what else to say. We showed some reversal signs yesterday, right? And now we are making an inside day of sorts so far today, at least. And, think about, it makes a lot of sense, actually, if you were to get a reversal of sorts here in the market as you got an initial kind of a dollar low, right? Where's the real emotion right now would seem to be probably the most, there's a lot of emotional markets, but the most emotion right now would probably be in currencies, right? So the dollar specifically. And how many times have we seen like an emotional market pivot, but it somehow, it also pivots a different market. So that's what I'm thinking right now with the S&P. I'm not, it's funny, like there's a lot of things that I'm super bullish on, like some of these, emerging markets. So Mahai says, if you were to try to short the S&P, what would be your strategy? So I would tell you right now, what it would be is it would be options, and it would be put options, and it would be, and here's why. So remember the analog from, this is the one presented, I think, several weeks ago, from the comparing the 87 low with the 2008 low. Well, it says that we're in the next turn window of sorts, if there's going to be one. In fact, it says it's literally now. And this is like a 10% drop. So my strategy to short the S&P, there's no possible way for me to try to short up here. So this would be, when you would sell your options, if it goes higher, I would buy put options 5% below the money. Okay. So 5% below the money, because if we're going to get a 10%, and it would have to be end of March expiration. Okay. So that's, you have to get some cheap protection or cheap speculation, whatever you want to call it. 5% below the money. And if you do turn down, if we do drop 10%, those options are going to multiply, probably by about 10 if you work out the price, if you price it out, which I've done. So that's the only way to do it, and it would be something where it's just to me, that's it. I'm paying the premium, and that's it. That's the stop. That's everything. That's the risk on the trade, right? There's no way for me to, at this point right now, like try to trade this, like actually short the market, right? I think that we are at or near some sort of a top, right? But there's nothing to work with here. Like, what are you going to do? I mean, you could be right and it ticks you out overnight or something, So that's why I would do it with the and the VIX is like so extremely low that the options are cheap because the volatility component's so cheap. So that's my thing with the S&P. Let's look at the DAX. So the DAX is 3 down, 3 up. Mahai, we talk about the DAX every week, and every week it seems to be hitting this line or just below it. Is this crazy or what? I mean, seriously. Like, look at this thing. It hit it again this week. So yeah, I mean, it's crazy. Every time like, here's a trading strategy. Just don't do anything until it hits the red line and then go short. Okay, so 3 down, 3 up. So I guess we could get this could be A, this could be B. We could get a C down. This actually is instructive from the sense that if this is your third, this is 3 up, it's probably a B wave, right? So that would tell me that if we do get a nasty C wave lower, which would imply breaking down below the 1-2 low, then you would actually be looking, that supports the idea that this is all a correction, right? And that you would be looking for support at lower levels anyway. You know, specifically a fourth wave, right? Because we're counting 1, 2, this is all 3, right? 1, 2, 3, 4, 5, and then maybe now A, B, and then C. You know, this has been so tricky, it supports the idea that it is a fourth wave because fourth waves are supposed to be extremely difficult. But at this point, several interpretations are valid. One being that this is A, B, and then you're going C wave lower. The other being that this is a triangle, right? I don't think that's the case because that would be a really shallow retracement for a fourth wave within, you know, this whole sequence, right? This was wave 2 of the same degree. Wave 4 should be bigger than this. If we go to hourly chart, 1, 2, 3, 4, 5. So you've got 5 up. So I would be looking to sell a rally. Or, sorry, 5 down. What's that? About 13,427. Pretty good level. So I'd pay attention to that for a short entry. All right, and then we needed to look at pound yen. And you're high level. It's one high so the whatsoever. Okay, I lost connection there for like 2 seconds. You guys hear me again? Just make sure. All right, cool. Okay, so daily chart. First, let me bring in hold on. Let me bring in the okay. What you're seeing here are all of the these magenta dots are all this divergence, right? And there are times when that works like super well, and there are times when it just doesn't work. So if we go back in time, or like when other times that we had these extreme, you know, like how many we have going on here? 1, 2, we got like 7 since the year started of these divergent readings. I don't think, I mean, there's strings of like 3, like this is like 3. I don't think I can recall a time of getting that many in that short amount of time. I mean, something like this, you know, kind of fits the bill for me, right? Like, so you had, this is back in 2006, okay? And kind of a similar pattern. It's like sideways, up, down, divergence, top. We go back to here, kind of similar actually. So maybe there's some work that I should do there and look at that. I will say a couple things. One, I do think we're, you know, if I was forced to trade pound yen from this point, like right now, and I couldn't trade anything else, one, I'd probably jump out the window. But 2, I would be looking at a short from these levels, right? Again, here's the problem. You've got log scale resistance says it's a little higher. We haven't hit it yet. You're looking at 56.20 or 56.30. And then arithmetic says we've hit it. Which is right? I don't know. I don't think there's a right answer. But from here, I'd be looking at, it just seems like a lot of overhead. I'd be looking at trying to short this. You know, I've written about it and I haven't shorted it because I haven't had like a signal yet. Like we haven't had any break. We haven't had anything really to trigger it. We haven't had a clean 5 down and a 3 up. It has, patience. It does pay in that respect. Maybe look at it like this, right? If we can get a channel going on here, let's see. Is this definable? I mean, that's not bad, right? You've got a channel here. You do have signs of what I'd call a lower ceiling, right? And you had this really strong pushes, these thrusts above this resistance. And then actually the last top you stopped at it. And then these tops recently, you've actually been on a lower plane, right? Been lower than over here. We've been on this parallel right here, okay? So that tells me that the trend is certainly weakening. That's like a representation of divergence, just not with an indicator, but with slope. I tell you what, I think that there is there's a shot, there is a shot here, right? The thing is that, again, my focus and where I think the money can be really made over the next week is going to be on this the dollar move on both sides. But yes, I will certainly keep it on the radar. There is a way of a low, there is a low risk, or I should say, yeah, low risk. I can't say how probable it is, but if you watch the level up here at 155.60, that could be an area, if you trade into it and turn over, it could work. The other thing to do, which a lot of people have a problem doing, including myself, is to try to trade the break of the trend line 154.70, and then you'd be taking it down probably towards, I'd say 52.86. But if you look at the 55-day average, has been very big support here, and I would look at that, which is currently down near 151, but in a couple days it's going to be higher because it's going up each day. So that's been support. 55-day average, you can see here, right? Support on 1215, support early this year, and that's going to be your level. So I'd be looking for shorts up here, target the 55-day at some point, and then move on from there. All right, EuroCAD, and then I got to run. I'm actually running a little bit over here. But let's go to EuroCAD. So my this looks like the extremely bullish chart, right? You've got looks like a big breakout. I actually think that this is going to fail, this move up here. So we actually are trading at the highest since, when are we trading? Highest since February of 2016. Okay. I'm looking for this to fail, maybe up near 54.50, primarily because of my interpretation right now of both Euro dollar and dollar CAD. I think dollar CAD could trade lower from here, again, down to the 2110 area. I think that Euro is going to reverse lower, albeit from 25.80, and trade lower. So this is a breakout, like a valid, technical breakout. I just wouldn't be chasing it. there's a trade here, it's probably to short. I'll show you the level that I'm talking about. Would probably be to try to short on this. Let's see. Yeah. So maybe we get that blowout tomorrow in euro or something, but that's the big resistance, and it is a couple hundred pips higher, right? But we're dealing in an emotional market here, so you can see the resistance over these levels just based on the trend line. Again, log scale back to February 2017, almost a year ago. So that would be your spot. So if you wanted to go, try to take it up to that level, you could certainly do so with just a stop under the whatever this low is here. What is that low from this morning European session, right? 52.60. Try to take it up to 55.60. So at this point, still reward to risk on the upside, but I do think this is going to fail, and I think it's going to fail near 55.60, 55.70. All right. That is it for today. So we have an eventful rest of the week, even though there's only a day left. I think tomorrow's going to be interesting, right? Please remember the level of 25.80 in euro, right? That is actually where we calculated out where the dollar DXY would be 88. So it's like kind of just the biggest level in the world tomorrow for me. And enjoy the rest of your week. And as always, thank you so much for your time. It's been a pleasure. And talk to you guys later. All right, take care. Bye. Thank you, Pete. Thank you very much.